Okay, so first things up, we're going to have a presentation, as I said, on copper, and we're delighted to welcome who's flown down from China especially for this conference. So we're very lucky to have her here today, Yanting Zhao, who is a senior consultant on base metals markets for Wood Mackenzie. So, Yanting, please.
Well, thank you, Leo, for the introduction. And good afternoon, everyone. So I'm from Wood Mackenzie. I think most of you may know our company from the old time, but I think it doesn't hurt to give you a brief introduction of what we cover from Wood Mackenzie. So basically, we cover two big areas in the natural resource industry. One is the mining metals field, and the other one is the energy field. So for the mining and the metals, we actually have coverage on copper, aluminum, nickel, zinc, and lead. And just recently, we have added battery raw material service to our existing coverage to meet the increasing demand and curiosity on the battery raw material and the EV stuff. So among all of this challenging and interesting topic on battery raw materials, I'm actually going to talk about an old but still attractive asset, which is copper. Last week, I was in Hong Kong to attend the LME Asia Week. And during the main conference there was a vote asking the attendees to vote which of the base metals they think will have the highest potential for price increase this year. 44% of the people voted for copper. So then the question became, is this a bull market for copper? Has the bull market for copper come yet? So in this presentation, I will be presenting Wood Mackenzie's views on this market. So first of all, I think if you track copper market closely, you'll be very familiar with this price chart. So basically, we have now passed the bottom of the last cycle. So the copper price starts to recover by the end of 2016. And there are two reasons behind the price recovery. The first reason is that in 2016, the Chinese copper demand actually surprised a lot of people on their initial expectations. And the second reason is that when Trump was elected as the president of the United States, a lot of people have very high expectations of what he is going to do to the US infrastructure sector. So that was the reason why the copper price started to recover. And if we look more near term, just before the beginning of this year, in the copper industry, a lot of people were thinking that this year there's going to be a lot of disruptions on the mine supply because there's a huge volume of mined copper going to be impacted by the labor contract negotiation this year. But what happened since the beginning of this year is that we have quite significant labor contract negotiations happened, but everything seems went smoothly. So nothing happened on like the strikes or mine disruption. So that has eased the markets and doesn't create the price increase that some people expected. However, at the beginning of March, another thing caused the copper price and other commodity price to drop significantly. That was the trade dispute between China and the US, and that caused a lot of people to start to worry about what this trade dispute will elevate it into a trade war and how that will hurt the Chinese demand. So basically, in the short term, the Chinese demand is still the most significant demand additions that we'll be seeing in the copper market. And in Wood Mackenzie, we actually have a bottom-up demand model for copper demand in China. And as you can see here, we break down the copper demand, the total copper consumption in China into 5 large sectors. The largest one being the electrical network sector, basically including the power generation and power distribution. And then there's the construction sector, including the construction of the housing and also the construction of non-residential buildings. And then there's the appliances sector, the machinery sector, and the transport sector. So among these sectors, we believe that the electrical network sector will contribute the largest tonnage of demand growth in the next 3 years. The reason behind that is that in China, we have a quite bullish plan from the government on the distribution grid in China. This plan is started from 2015 and will end at 2020, so that gives us the upside on copper demand from the grid. However, if you look at other sectors, we forecast that copper demand will slow down across board. One of the main reasons, if you look at a very high level, is that a lot of the policy incentives in 2016 and 2017 have front-loaded the copper demand. Just taking the transport sector as an example, so in 2016 and 2017, China has this tax cut on small engine cars. So any families with a plan to purchase a passenger car in the next few years, if they choose wisely, they will choose to purchase a car in 2016 or 17. So in this year, the tax policy has expired. So we are expecting that the auto production and auto sales in China to slowing down. So different sectors have different stories, but the similar thing is that the supportive policies have pushed forward demand. So we are going to see the slowing down in demand in the next few years. However, we are also likely to get some support from the scrap market. So as you know, the total copper consumption consists of refined copper consumption and the direct use of scrap. So if there's less supply of scrap in the market, then there will be more demand for refined copper. So what's happened in China at the moment is that in April, the government has officially published the policies to ban the import of Category 7 copper scrap from imports. It will start at the beginning of next year. However, we believe that the main impact is actually going to happen in this year. This is because this year the government has already started to limit the import quota for Category 7 copper scrap. And here you can see that we have put out our analysis on how this will impact the scrap supply. So as a very quick summary, you can see that in this year, we are expecting that the total copper scrap supply to be reduced by 100 kilotons. So that is not a very significant volume if you think that China is such a big country. However, we believe that most of the impact will actually happen on the direct use of scrap, meaning that we are going to have a boost on the refined copper consumption because of this. And then we're looking at our forecast for refined copper consumption around the world. You can see that we have a similar level of refined copper consumption growth for this year in 2017, but the mixture has changed a lot. So first of all, you can see that Chinese demand is slowing down. So as I explained earlier, the end-use drivers are pointing to a slower copper consumption growth, while on the other hand, the scrap supply will provide some buffer, but we're still going to see the Chinese demand slowing down from 3.5% to 2.3% in this year. But elsewhere in the world, we are actually expecting that the growth rate of demand will picking up this year. And this is especially true for the United States and also the Asia countries outside of China. So for the US, the story is mainly about their construction and property sectors. So the recent data showing that the construction sectors are performing very well at the moment. And for the Asia countries outside of China, of course, the traditional demand centers like Japan, Korea, and Taiwan, they are performing very well. But additionally, we think the stronger demand are coming from the Southeast Asia countries and India. So I think if you look at the short term, the story is still mainly about China. But you can see that we are forecasting China is slowing down a bit. So in the longer term, is there another country or another region that could pick up the copper demand growth in the longer term? That will be a question. I think among all of these countries, people always had a very high expectation for India. I think starts from 10 years ago, people started to talking about how India demand will pick up and how India could be the next China. But in the past 10 years, I think India has failed our expectations to some extent. The reason behind that, we believe, is that, first of all, if you look at the mix of India's economic mixture, then the service sector is growing very fast, but the industrial sector is sort of lagging behind. The reason behind that, we believe, is first of all, lacking of investment in infrastructure, and secondly, the tax structure is not right to support the growth of the industrial sector. But we actually are seeing the changes are happening in India at the moment. First of all, since Modi took the office as the Prime Minister of India, you can see in the left-hand side chart that the infrastructure investment in India actually increased significantly. And the second thing is about the tax structure. India has a tax reform last July. So this tax reform is called the Good and Service Tax Reform. Before the tax reform, so each state of India had a different tax structure. So it was very difficult to move goods across the borders of different states. So it makes difficult for India to develop an efficient supply chain for its industrial sectors. But what happened in last July is that the new good and service tax was unified structure across the country. So now the country has a unified tax structure, and we believe it will be very supportive for the industrial growth in the country. And as you can see for these industrial indicators, you can see that India's industrial sectors responded to the reform immediately. As you can see in the green line there, is the industrial production in India. And you can see it has been rebounded since the tax reform. And if you look at the indicators for other important industrial sectors, you can see that there are some rebound after the tax reform. So we believe that both the infrastructure spending and the tax reform has set up a very good foundation for India to grow further. And if we just look at on very high level, what will be the growth profile for the different regions all over the world after 2020, then we think that China is moving from the first player in demand growth into the third player. But at the same time, the Asian countries and India will pick up and will be generating the most significant demand growth in that field. The reason, if you look at the very high level, is because they are countries with huge population, and also the urbanization speed is very fast at the moment. So emerging market definitely is one growth aspect for the copper market. Another very exciting growth market is the EV market. So in the past 2 weeks, I've been visiting and talking to a lot of our clients. And in every meeting, the center of the topic is EV and what EV could do to the copper demand in the longer term. So in Wood Mackenzie, our analysis on copper demand from EV is actually from two aspects. One is the copper demand from EV itself, and you can see the numbers from the left-hand side chart. And the other one is the EV demand copper demand rising from the EV charging infrastructure, and it's showed in the chart on your right-hand side. What is your observation on that? I think it's very clear that the copper consumption rising from EV itself is the most important one. And the demand from the infrastructure side is actually a small portion. So what will happen to EV's demand? You can see on the left-hand side chart. We believe in the short term, it's not going to generate a very significant volume of demand. But we believe that volume will become significant around 2025. The reason why we think the 2025 will be a key threshold is because of the cost of the EV. So as you know that the battery cost has been dropping significantly, benefiting from the improving battery technology. So we actually believe that the electric vehicles, especially the pure battery electric vehicles, will achieve cost competitiveness with its gasoline counterparts around 2025. So that is the timeline we believe the market will start to grow very strongly. And that is the time the copper demand from this area will become very significant. So now we've talked a lot about the demand side and what will happen on the supply side. So since the price rebounded in late 2016, I think the moods in the copper market, especially the moods in the mining companies, have changed significantly. So these are the newly approved projects that we've been observed since the beginning of 2017. So in Wood Mackenzie, we put copper projects into different categories. The possible projects is the projects that has a long way to go to be in production. The probable projects is the projects that are only one step away of being put into our base case. And this amount is those probable projects has been moved into our base case supply since 2017. Our observation of this part of the supply is that most of them are either the brownfield expansion or the restart projects. So you can think that they are the easy wins in the market. So we haven't seen enough greenfield projects being approved since 2017. So what's the problem? What would be the problem in the market? It is that even if we add this significant amount of newly approved projects into our base case, we will still see a supply gap emerging after 2021. So the light blue area is the base case of our analysis. And you can see that the orange line is the primary demand for mined copper. So you will see that there will be a gap start to emerge around 2022. And that is when the market is going to run into a deficit market. And as you can see here, we are still in need for more greenfield projects to fill the gap between demand and supply. So based on our demand forecast and also our supply forecast, what will be our price forecast? I think this is probably the question a lot of people most care about. In Wood Mackenzie, our methodology is that the price will change according to the movements on the cathode inventory. What happened now is that the cathode inventory of copper is still above historical average of 65 days of consumption. And as you can see here, we believe the copper market will be remained in balance, largely in balance, a few years ahead of us. You will now see significant movements in the cathode stock, and the cathode stock will remain above the historical level of 65 days. But after we starting to fill the supply gap in the mine market, then the deficit will gradually transfer into the cathode market. And then we'll start to see a significant drop in cathode inventories. And once the stocks are below the 65 days of consumption, then the market will start to feel that the copper market is lack of cathode, and then it will trigger a significant increase in price. And then the price will surge to nearly $4 per pound. But we believe that after that, there will be new greenfield projects being able to fill the gap and cause the price to fall again. And our long-term price forecast is still based on our incentive price of $3.30. So just give a very quick run through of the key takeaways here today. So first of all, we still believe that China will generate the most significant tonnage of copper demand growth in the short term. And the Chinese ban on import of Category 7 scrap will boost demand in the short term, especially in 2018. And then in the longer term, we are expecting that the copper demand from India and the Asian countries to pick up, and they will become the two largest growth region in the world for copper demand. And lastly, the copper market will remain supported with a balanced market over the short term, but in the longer term, we are expecting the stocks of days to drop and then a huge increase in price. So in the last, to answer my question at the beginning, a bull market for copper, I would say the bull market is not here yet, but we're expecting that in the longer term. Thank you.
Much, Yanting, for a great presentation there. Do we have any questions? We have a few minutes for questions. Anybody want to ask a question? Have a little think about some questions? There's a lot of, when you're looking out to 2025, there's obviously a lot of factors that could possibly influence the market significantly, like the speed of the uptake of EVs may be surprising to the upside, or some new mines some new deposits being discovered, or maybe some mines not coming to production. How confident are you of those figures when you get out towards sort of 2025?
Okay, so I think the risk is probably on the demand side, about the EV story, and of course the story of the Southeast Asia and India. So for EVs, I think if you compare our version with the market, I think we are probably on the conservative side of things. So there could be some upside risk for even more demand coming from the EV side. And for the developing emerging market in Southeast Asia and India, then the concerns become, will they achieve the growth target? This is one thing. And the second thing on the upside is that we know China is developing this one belt, one road. And the target is to, through the One Belt One Road initiatives, to incentivize and push forward the infrastructure development in these countries. So will that help to boost demand in the region? That will also be a risk in our analysis.
What are we seeing so far in terms of the One Belt One Road, in terms of infrastructure projects actually going ahead?
Yeah, we've seen some infrastructure projects moving ahead, but I think it's still at the initial stage, and a lot of these projects are like some kind of campaign projects. So trying to showcase Chinese abilities to develop and Chinese technology. So we still need more time to see whether the whole region and all of the countries along One Belt One Road can accept this idea.
Any questions here from the audience? Please stick your hand up at any point. You mentioned the EVs obviously a lot in your presentation. What about the demand coming from renewables? Obviously Europe is embracing renewables, and China as well, building a lot of solar panels and wind farms and things like that. Is that also have potential to surprise on the upside?
Well, so we also did some analysis on the renewable energy side. The thing, well, if you ask me for just one takeaway, the impact is not big enough. Although, you know, although the generation capacity of renewables are picking up, and although the copper intensity in renewable energy is higher than like the thermal power, but if you look at the overall copper consumption rising from power generation, it's a small portion of the total copper consumption in the world. So even if there is a strong pickup, it's not going to be significant enough for the market.
And if people want to get hold of information on the copper markets, how do they contact you?
Well, you can contact me. You can have my cards. Thank you.
Fantastic. Any final questions? If not, can I have a big round of applause for Yanting Zhao?
Thank you very much.
Thank you very much.